Hello and welcome to the special IPO KYC of Hyundai Motor India Corporation. It boasts of many firsts. India's largest ever IPO in terms of offering at more than 27,000 crore rupees, valuing the company at $19 billion. It's also the first time in more than 2 decades we're going to have an auto company getting listed in India since Maruti's listing in 2003. Now, Hyundai needs no introduction. It's India's second largest passenger vehicle maker since 2009, the maker of popular Creta, revenues of 70,000 crore rupees, and a domestic market share of nearly 15%. Joining me today, we've got Mr. Unsoo King, MD of the company, and Mr. Tarun Garg, COO. Gentlemen, thank you very much for joining in, and congratulations. Big, exciting day.
Thank you.
Thank you.
Okay. Mr. King, my first question is, why the IPO? Because brand Hyundai is ubiquitous in India. It needs no visibility. You don't need any cash. In fact, this is a pure offer for sale. So why the IPO? Because some believe it's probably just to capture the booming Indian capital market.
India is one of the most exciting auto market in the world, and the HMI has been performing well for more than 26 years from the 1998, and is second largest passenger vehicle OEM in India. We believe it is the right time to take a further step to Indianize our operation in India.
The whole world is looking at India today with a lot of excitement because of the high GDP growth. So we believe, yes, this is the right time, because so much success we have got in India. And now, this would be, like MD said, this could be probably the beginning of the next phase of our growth story in India.
Beginning of the next phase of growth story. But how much of a factor were the valuation differential between South Korea and India? Because some say it's an early Diwali for Korean shareholders because the Indian arm contributes less than 10% to the revenues and profitability. Yet, once the Indian company is listed, it will enjoy a valuation which is about more than 40% of the South Korean market capitalization. So there is a big difference in valuation.
So look, like MD said, we have been in India for 26 plus years and, a great success in India. And frankly speaking, this is a very good opportunity because now we want all the Indian investors, the global investors to be a part of the growth story. Yes, the valuations are high, but I believe this is very good. You said early Diwali. I think early Diwali for India, because this is the best season, and we believe that, yes, once the investors are a part of this growth story, it will really encourage us even more to do better.
Okay, so talking about the growth story, globally, auto industry is facing some headwinds. We've got Mercedes-Benz, they've cut their global growth outlook. Nissan is looking at production cuts. Ford has even cut jobs. Back home in India too, so far, the monthly sales numbers growth has been flattish. So talk about growth for you, because capacity increase comes in only in after 12 months. So do you think growth would be tepid?
No, frankly speaking, we are very, very encouraged by the growth. If you see the Indian industry, last 2 years, we had a 22% growth, then we had a 8% growth. The CAGR, of course, is at 5%. So there will be always some ups and downs. And believe you me, the June, July, August period always has been a little bit of a sluggish period. But now that we have entered the festive season with the Navratras and the Diwali, things are looking very up. So we are very, very confident about the growth of the Indian auto industry. And we believe
no
that
underlying demand weakness in India.
Frankly speaking, no, but yes, look, some kind of crest and troughs would always come. Because at the end of the day, CAGR, if you see, whether you see a 5-year CAGR or a 10-year CAGR, it is at 5%. So when you grow by 22%, when you grow by 8%, some moderations would always happen. But like I said, in the mid-term, long-term, absolutely no issues.
But do you think this year we will see moderate growth compared to 8% of last year?
Look, probably a growth itself is very good. Okay. Sometimes we tend to believe that, yes, unless you grow double digit, it's not a good growth. But we believe as long as we are growing, it is very good.
So you're very optimistic going into the festive season. What's the pickup in growth rate? Can we get to double digit, do you think, in this October to December period?
Look, when you compare with September, the inquiries, the bookings, the retails are very, very good. So I think it's very, very lot of optimism around it. Also, this is after many years that in October itself, both the Navratra, Dashera and the Dhanteras is coming. So I think this is going to be a bumper month.
You said the bookings inquiries are all higher so far in the month of October compared to September. How much higher?
So if you see, it's only first 8 days, but still we are looking at about 30-35% higher than the last month.
Okay, first 8. And what about discounts?
So look, discounts are a function of the market. In the festive season, obviously, customers are looking to really buy their cars, and everybody wants to give them the best value.
So are discounts higher?
So I would say their discounts are probably at the best, and this probably is the right time to buy.
So let's talk about your capacity expansion. Now, last year, you all acquired General Motors' Talegaon plant. The first phase of your capacity expansion, which increases your capacity by 170,000 units, comes up only in H2 of FY26. And following that, in phase 2, the aggregate capacity goes up by 250,000 units. So a few questions. One, when will phase 2 be operational?
So if you see the phase 1, like you said, currently we are at 824,000. The phase 1 will be kicking off in H2 of calendar 26, which will bring us to 994. And phase 2, as of now, we believe by 2028, the balance 80,000 will come, which will take us to more than 1.07 million capacity by 2028.
Okay. And what will be the total investment between phase 1 and phase 2 till 2028 that you've planned?
We are investing the 6,000 crore in the Pune plant. And also we are investing more than 320 billion rupees for the next 10 years. Right?
Okay, so 6,000 crore for the Pune plant and 32,000 crore of an investment for the next 10 years. And how would this number of 32,000 crore compare versus the last 10 years? Are we seeing a pickup in investments in India?
So far we have invested about 30,000 crores, close to 30,000 crores. So you can see that, yes, we are as bullish in the next 8 to 10 years as we have invested in the last 28 years in India.
Yeah. Is it true the cost structure of the Talegaon plant is higher, because of which even the General Motors sale, the plant sale, took some time? Is there a risk to your margins because of this?
Frankly speaking, to get the Talegaon plant like a brownfield, so it's a great opportunity because it gives us, from a logistics point of view as well, it gives us another opening. At the same time, we are really making sure that this plant becomes one of the highly automated plants, in India. So we are really looking at using all kinds of automations, and so that we get good efficiency, we get highest quality standards. So I think we are really leaving no stone unturned.
So on margins, is there a risk or margins remain stable from here on?
If you see, because the 170,000 additional capacity will come in, I think that will help us to add volumes both in the domestic as well as the export markets. So if you see the midterm, I think it will have a positive impact on the margins.
Midterm, it will have a positive impact. Mr. Kim, in fact, the company has done a great job of keeping margins stable through all the cycles that the auto companies go through. What is your own view on margins? Do you think with the help of automation, higher sales, margins from here on can expand?
We have a good track record of profitability. We have a good balance of export and domestic, and we are focusing on the premiumization, and also we are more focused on the SUV model mix. And we have a very good high level of localization and high level of utilization of our capacity. These are things that are for the better of our profitability. Right?
In fact, let's talk about each of these three things. Premiumization, increasing focus on SUV, and it's already very high, with about 70%, I think, of your domestic sales come from SUVs, and exports. Now, the global company wants to make India as the export manufacturing hub. Currently, exports are 23% of your overall revenues, hovering around that level. Where does it go from here?
In terms of export, HMI is positioning our company as an export hub for emerging market.
So do you think the percentage contribution of exports go up because it's going to be a manufacturing hub and you've got increased capacity coming on stream?
In terms of revenue, like you said, 77-23, in terms of volume, 80-20, looks to be a very good mix. The percentage could always vary depending on the geopolitical situation, the economics. The good thing is with the additional capacity coming in with Pune, you know, the headroom will be there to really look at both the domestic and export markets and, you know, to see how we can grow the volumes.
Okay. How much higher are export margins?
So, look, I can only say that because we get a lot of incentives from the government thanks to encouragement. So, you know, we have a very healthy encouraging margins in exports as well, like the domestic margins.